Well, welcome back. You're still watching Closing Trades right here on ET Now. And Mayuresh Joshi, Fund Manager, Angel Broking, joins us with his perspective in the markets. Mayuresh, good to have you on the show. Thanks very much for taking out the time. And, as Neeraj and I were just discussing, the market has made a complete U-turn. I mean, if this is the way things end and, we perhaps see another rally going into the final session of the week, then it would be a fairly fabulous close, fabulous finish, just to rhyme the words, to a historic week.
Afternoon, Tanveer. Clearly, I think it's been a U-turn of sorts, specifically on this expiry day, but you're not really sure on what might really come out of China. Whatever China is trying to do is a clear indication that growth has got diminished in China, and clearly I think that is also reflecting in the way the global scenario seems to make out of it. So clearly I think in a situation when you're talking about global growth tapering off, even when oil prices are coming down, yes, I think structurally it becomes a positive for India. But again, I think the oil producing countries, their purchasing power probably goes down. So clearly I think it's a mix of how you look at things, and clearly we are at this stage of the markets where you're not really sure where the markets are heading, at least from a short-term perspective. But clearly I think such sharp corrections, in our opinion, give long-term investors a chance to at least start buying incrementally into the markets, not expecting a huge amount of commitment to come through, because you're not really sure where the markets will head in the short-term perspective. But clearly I think a small allocation of 10-15% at the current juncture in specific sectors and stocks is the way going forward, in our opinion.
Okay, I'm looking at a few stocks. We're closer to 255 now, actually 3-4 minutes away from it. I'm just trying to figure out what are the stocks that have moved up in the last few minutes of trade. I think Symphony is one. We should pull up that stock for our viewers and just show you what that is doing in the session, the intraday of Symphony. I think it shot up in trade, 2002 up 5.5-6%. Tata Sponge in the last 15-20 minutes has gone up about 8%. Escorts has moved up even further. It is now at 170. So Symphony, Tata Sponge, Escorts. Then there are a couple of other names like Ingersoll and Shanti Gears, etc. But just look at some of the moves that have come out there. 17% for an Escorts. This stock has not moved so much, even on a day of fabulous results, really. So, yep, there is quite a bit of activity in the broader markets. And Mayuresh, we were talking in the break. You were talking about buying selectively. My question is, what is it that you would buy selectively? Would you buy risky names right now because the market has come off so much that risk may bounce back quite strongly? Or would you continue to buy quality? Or would you actually veer somewhere in the center, buy a little bit of risk and a little bit of quality?
Afternoon, Neeraj. I think our focus always has been on a bottom-up approach. So I think qualitatively, if you look at how the earnings
Mayuresh, I get your point. Mayuresh, I get your point. That would always be the case. It would be bottoms up, yes. But right now, if somebody wants to put in some money into the markets looking at this 2% rally, yes, would you prefer at large the high risk, high beta play, or would you still go with quality? Then, of course, you will use the bottoms up approach. I'm talking about the main investment theory right now.
So clearly, Neeraj, I think quality is the way to go forward right now, because you're not really sure in terms of how the beta play will pan out. In case of a global scenario where the markets correct in the coming week, the highly leveraged stocks might come down the way they are going up today. So clearly, I think the way we see it, and at the scenario that we see the markets, we like selective themes across the EPC pack. We like selective themes like an Inox Wind, where we believe that the potential of the company to report earnings growth will be far more substantial than what it is reporting right now, with capacity additions coming through, and they've got a strong capex plan in terms of the rotor blades and the nozzles and hubs facility. Clearly, I think that will augur well on how the top line grows. The margin expansion should be quite evident. So our only take is that good growth happening on all quarters, top line, margin expansion, bottom line growth will ultimately lead to earnings re-rating for a lot of these stocks. So Inox is something that falls in this league. Similarly, I think Garware Wardrobes is something that we like from a mid-cap basket. So not all mid-caps probably at this juncture should be ignored. The company clearly has posted a decent set of numbers if you've gone by the quarter and the results that they have posted. Again, the kind of expectations that we have in terms of earnings for the company with crude oil derivatives going down, margin expansion should be quite substantial for the company. It exports close to 50%, so I think 50% of the top line actually comes down from export, which they're planning to increase to 65%. They've actually got their debt down from 140 to 45 odd crores. Their interest payments have come down from 70 to 10 odd crores, which is related to ROEs expanding from 9.8 to 13.4%. So clearly I think we see a lot of value in specific pockets, specific stocks, and that is where our belief is that once the capex cycle turns, these stocks can benefit much more in terms of earnings momentum going forward.
Right. Okay, Mayuresh, just stay on with us. Lots more to discuss. I just want to mark Escorts again because a fabulous performance coming in for that stock. Above average volumes, I think almost 32.5 crore shares, 32.5 lakh shares traded on that one. But look at that mighty move. That's a big spike coming in, closing into a 19% gain and still looking strong in the momentum in which the stock has moved higher. It seems like there is more headroom at this juncture. But ideas at 255, and Ashwini, I'll start off with you. What is it that you'd recommend?
I think Escorts is the call right now because it's basically taken out last 20 days worth of action, or rather 10 days worth of action with one bar, and chances are you'll soon see 200 on this. So this is a buy with a stop of 166.
What a move there on Escorts, by the way. Tata Sponge is the other one. We'll come to that. But Sandeep Wagle, your top call at 255.
Neeraj, a buy in a Jubilant Food, stop loss of 1670, target of 1760.
Stock up for you. Jubilant Foodworks is the stock that Sandeep Wagle is recommended 5% higher. 1712, really good going. You know, while Tanveer pointed out Escorts, look at Tata Sponge, look at Amtech Auto, look at the din in our studios, look at the amount of excitement in our studios right now. You can probably hear a lot of background noise, and that is because of the way the markets are doing what they are doing right now. It's a really good day of trade. 7951 on the Nifty. Waiting, Hemant Thukral, he will be joining us any moment right now. FNO expiry, and he gave the call on the Nifty, buying the 7950 call 2 days ago. I think everybody who followed that would have been well in the money as well. So I'm just waiting for the FNO expert to join in as well. But Ashwini, the other interesting point really for today's session is that while the markets are up so high, a lot of high beta stocks have done well. BHEL has crumbled, and yeah, there are some reasons to it as well, attributable, yes. But as a trader, how do you approach this one? Because typically BHEL, Thermax and a few other economy-related stocks would essentially bounce back when the market does what it is doing. What would you do with a BHEL?
There's one company China is going to take the cleaners, is probably BHEL. So it just shows what you should buy even if the market does well. Possibly BHEL is now looking to move towards 200. So while it may not fall on good days, definitely it's not a buy, and it's broken down from those 260 type of zones. It did well for a day after the results, but post that I don't think it's showing a whole lot of traction, and capital goods etc. I don't think is going to move like people expected. Mostly it will be exporters, probably a few banks because the policy is coming up ahead. But really, if you have to make money in the market, it should be mostly the currency sensitives where you should look at.
Okay, bring up Symphony yet again. We're talking about cap goods and manufacturing stocks. 2200, 16% up for Symphony. 307. This is a really strong move. Remember, post the numbers, it consolidated for a few days at around the 1900 mark. In today's session, up quite smartly, 16.5%. Remember, it's a low volume stock, traded only on the Bombay Stock Exchange. So it's not a very liquid stock. A buying of a few thousand shares alone in Symphony could take the stock to a next level, and equivalently, some bit of selling could actually take the stock down as well. But this is a serious move on Symphony today. Mayuresh, do you have coverage on Symphony? I was just wondering, when the results came out, the management quite indicated to us as well that while yes, the last 2 quarters have been bad, they reiterated a 25% growth guidance for the next year, and he seemed pretty confident of achieving that as well. What's the call on this one?
So clearly, Neeraj, I think we don't have a coverage, so very difficult to give a view on the stock. But if you combine the industry outlook, our stake is still that Blue Star is something that we still continue to prefer. Yes, I think there have been issues related to the electromechanical project segment for a lot of these companies operating out of this segment. But the numbers were far better than what the management had indicated. So again, I think Symphony has given a stupendous move in terms of numbers that they've delivered.
Sure.
But Blue Star is something that we continue to prefer.
Sure, Mahesh. Okay, Mahesh, stay on. But we need to get to the management of Bosch. And they've inaugurated a facility as well, 14 manufacturing facility in Bidadi in Karnataka. That's on investment of about 340 odd crores. So Stephen Burns, who's the president of Bosch, do we have him? Yes, I think he's told ET Now's Rahul Dayama that they expect the automotive market to pick up quite substantially due to economic conditions as well. Let's hear out a slice of that conversation.
We have built this plant during the last 2 years. The groundbreaking was in September 2013, and we have invested some 340 crores so far. You see that this is state-of-the-art, very modern production plant as you would see it in any developed country as a Bosch plant with lots of very modern facilities. We are basically shifting the production from our Bangalore facilities. We do it in 2 phases. So first phase now and the second phase will be in 2018.
What kind of investments have gone into this facility? Can you throw some light on that?
Yeah, we have invested some 340 crores so far in this plant. There will be more, of course, when the second phase is going to come up. We can't quantify this exactly now.
Also, we understand that you're planning to introduce new products in the next 3 years. What kind of new products are we talking? What category are we really talking about?
Yeah, this is mainly a diesel plant. And as you know, there will be new emission legislation for diesel, BART Stage 4, BART Stage 5, and eventually also BART Stage 6 coming up. Here in this plant, we are mainly concentrating on the pumps. And in the pumps, we will have new generations of pumps coming up for smaller and also for larger diesel engines.
I also want to understand from you, what kind of a growth do you envisage in the next few years in the auto and also the non-auto sector vis-a-vis your other businesses?
Yeah, we can't forecast and give you any guidance on the growth we are seeing for Bosch, but overall on the automotive market, after this has been more or less flat now for 3 years, we expect that it's going to pick up very soon. So there are very many good macroeconomic indicators which point in a positive direction. So therefore, overall, we are very positive in the midterm on the future in India, which means that there will be good growth rates again. And this, of course, then also will be of benefit for us, and we will benefit from these good growth rates also in this plant.
Also, you had previously indicated that energy efficiency and,
All right, that's the Bosch management, talking about their new plant. And, this story has pretty much been something that the market has digested. It's not over and done with because they have very strong expansion plans. But the stock story, and, I think just the year-to-date chart, we've already highlighted that in the past as well. But I just want to bring it up once again for the benefit of our viewers because it's just such a story that the market has liked for a very long time. An expensive stock, slightly illiquid index stock, but you're looking at a phenomenal run for Bosch. 23,300 says it all.
By the way, some other stocks, Tanvi, there are so many of them. Titan has suddenly moved up in trade, 348, a sudden spike that has come into that stock. Look at Crompton Greaves, there's a bit of a spike that has come into that stock as well. So a bunch of these mid-sized companies are really shooting around in trade. 2225 for a Symphony now. So that is up almost 17 or 18% if I'm not wrong. These are some serious spikes that has come in. Bata, something that we recommended just a while ago, that one has shown a spike as well, 1112. Godrej Industries is a bit of a spike too. So I think there is a lot of action and a lot of activity currently on in the markets. Almost 3% for the CNX small cap space. When was the last time we saw the CNX small cap index move up 3%? For the last at least 15-20 days, I can't remember a 3% uptick on the CNX small cap index, frankly.
No, it's a good move. I think if the Dow Jones futures are anything to go by with, given that the market is drawing indications from there perhaps might be a bit more headroom for the markets from here. But this is an encouraging sign.
Yes.
A 2% gain on the Nifty. There's broad-based buying interest. Small cap index is up 3%. Market breadth is healthy. Quality stocks, weaker names. Well, some of the high beta names are also moving in the market. So from I mean, all in all, it looks decent. Though your point on that 79.50 call getting rewarded, that one is really played.
The guy's here. The guy's with us. Hemant Thukral joins us right now on the show to talk about what he believes could happen next. Hemant, a really, really good call. I remember our conversation on the market at 9:30 a.m. day before yesterday. You mentioned that you would go out and buy a 7950 call. I don't know how the IVs etc. have worked, but all I'm saying is to think of a level of 7950 2 days ago. Not too many people actually did that. Good call there. What does one do now, though, Hemant?
Say, good afternoon, and first of all, very clearly, let me discuss 2-3 data points which I have just noted down for recommendations. First is, see, if you are a pure Nifty trader, I think this pullback will strengthen more in next 2 days, and you will see it going up to 8150. That's a typical target that I'm looking at. But let me tell you one thing, that I have always been a big follower of the trend. The trend has been slightly broken in the sense that we have got an expiry which is lower than the last level, quite lower than the last level. So we are closing negative in this expiry. So definitely the pullback is now materializing. VIX has now started to come off from 30, it's come down to 22. I think VIX can revisit 17, 18 levels, but it has to come below 15 to restart the bull markets. So if you are a Nifty trader, add another 200 points from here, and I think the pullback has that strength. And Bank Nifty is 17,600, 800. That's a target I am looking at. And Bank Nifty pullback, I think these two have just started the pullback. And in next 2 days, next 2 to 3 days, I think this pullback will show more strength.
And if you're saying more strength, could you put it out in terms of levels, both on the Bank Nifty and also the Nifty, Hemant?
See, as I suggested, Nifty, I am seeing 8150 coming in, so 200 points rally more can come into it. And if anybody is buying on this recommendation, I would feel that this pullback trend is over if it dips below 7850 or 7880. So until the level it's holding virtually above 79, I think chances of 8150 in next 2 to 3 days coming are faster. And Bank Nifty 17,800, that's a level that I think spot levels of 17,800 should come in, and I don't see Bank Nifty breaking below 16,800 now. So next 2 to 3 days, expect the pullback to continue.
Yes, indeed. And just repeating that answer really for the benefit of our viewers, be mindful of the levels that Hemant pointed out. 8,100 is the upside that he sees to the index in this pullback rally. You know, HDFC surprised me, and I think many on the street as well. First, the crack in the stock is fairly significant, and this one is institutionally held. It's a strong performer for the market and a consistent one. What is a view on HDFC that you're taking into the new series? 8% up, that's an 86 bucks gain in the session today. Hemant?
See, I have a feeling that all financial institutions, especially the housing finance companies, have started seeing some pullback coming in on the back of good rollovers. HDFC has seen slightly lower rollovers, but very clearly short covering has taken over. So I would actually prefer the other two, LIC Housing or India Bulls Housing Finance. These two I will prefer over HDFC. However, I still feel that there is a lot of short positions open. So by another 15-20 minutes, HDFC may show us a double digit gain. So 10 to 11%. I will not rule that out. But if you are looking for something for say next 3 days or next 4 days, I would actually prefer India Bulls Housing Finance or LIC Housing Finance.
Okay. And if you are not looking just at the next 2 days, Hemant Thukral, I'm actually coming back to you before I go on back to Mayuresh as well. I remember last expiry, you gave a call on HPCL, or was it maybe the expiry before last? I think it was the last expiry, a call on HPCL, and the stock rallied quite significantly after that. What is the top call for the next series, Hemant?
See, again, as I always say, I would if you are talking about the OMCs, then IOC is the one which I have my main trigger point this time, just purely because it has seen more rollovers. So IOC, I think, will outperform HPCL and BPCL now, and you will see the targets coming around 460, 470. But having said that, if you are looking at the top picks, I would actually look out even for two more stocks which I have in my radar. One is Ashok Leyland. I think the stock is phenomenally doing well. It's been an outperformer even when the market was coming off, and now it is actually moving up on good positive rollovers, long rollovers. So I have a feeling you will very fast you will see 97, 98 levels, and one can keep a stop loss of 88 on the same. And the second one would be in the pharma, that is, I would be looking out for Aurobindo Pharma. I think again the rollovers have been on the positive side, a mid cap stock, and I'm looking at a target of 795 to 805 on the same, and stop loss of 720. So these two stocks I would be picking for some fast gains as traders in next 2 to 3 sessions.
Mayuresh, actually, interesting point, and the charts consistently find Ashok Leyland as a stock to buy, and it's not disappointed. Frankly, it's actually done very well, and they've done very well in the results as well. Frankly, so fundamentally they are performing. Tata Motors is not, and therefore getting punished, and maybe Tata Motors is almost obviously a lot more JLR than what the domestic story is. But is Ashok Leyland pricing in a lot of benefits right now? I mean, what are the numbers that you are working with for Ashok Leyland? And would you go out and recommend people to buy into this one?
So clearly, Neeraj, I think we did like Ashok Leyland at lower levels. We kept on recommending that, and still we find that there is still some juice left. If you look at the way the MHCV volumes are panning out, they are seeing signs of revival. And again, I think our own take is anywhere between 17 to 20% in terms of pure volume growth, specifically for the MHCV segment. Clearly, I think the discounts are going down in a substantial manner, and the LCV is the only weak link in the entire chain of scheme of things. So clearly, I think if there is volume increase, specifically from its excise-free Pantnagar plant, which the management hopes to do, the margins that Ashok Leyland posted at this point of time, they might be able to sustain those. With the prices of crude and diesel coming down, you're obviously seeing profitability of fleet operators increase, and clearly that will also reflect in terms of how the volume growth will pan out going forward. So we're extremely optimistic in terms of how the MHCV volume growth will pan out. Ashok Leyland becomes a key beneficiary. It's increased its market share a tad bit over the past few quarters, but our take is that the earnings momentum should continue for Ashok Leyland, with discounts going down, realization stabilizing, and volumes picking up. So clearly, I think this is a story that we back, and we continue to have a accumulate recommendation onto this stock.
Okay, Ashok Leyland is one story that's held out quite smartly among the autos. Mayuresh, what does one do with the true blue consumer names now? Because in this fall, I don't know whether it was highlighted as much because there was just this carnage across the street. I don't think a lot of them fell as badly as the market by itself, and of course some of the other sectors. In fact, IT and pharma perhaps fell a lot more despite being defensives. So do you continue with that trade? Do you think that the little setback that perhaps consumer names got in this sell-off is an opportunity? Because I don't think that there's been a major reshift really in the valuation of some of the expensive consumer names. Relatively, they're still expensive, but stay with them given the market uncertainty.
So clearly, I think it becomes a pure defensive play again, and though valuations are not in favor of many consumer stocks considering their long-term averages, I think what clearly will benefit would be the lower input costs. So the gross margin expansion would be quite evident on a lot of consumer names, albeit the issue of volume growth. So volumes will still remain tepid in our opinion, and clearly I think the two main themes that these stocks bank upon is how the discretionary demand shapes up. And in case of bad monsoons, which we feel are the current position of time are, I think clearly the rural discretionary demand is going to take some amount of it, which means that the volume growth in the coming few quarters might take a hit. Clearly, I think the ad spend is also one angle that needs to be looked at, because there will be a lot of competitive intensity pressures coming through. But we remain extremely selective when it comes to the consumer pack. So Britannia is something that we continue to like at lower levels. Our recommendation is to still hold on. The valuation is a tad bit expensive for fresh buying at this level. And Bajaj Electricals is one theme that will still continue. I think the company posted a decent set of numbers, and clearly the E&P segment was one weak link which has shown a huge amount of bounce back. So again, in terms of top line growth, we expect 12% to come throughout the next 2 years. Our own expectations in terms of margin expansion should take place, and the company should actually post a decent amount of profits, purely based that the EBIT profits from the E&P segment should come anywhere between 96 odd crores from losses of 84 crores in FY15. So I supported by the consumer durable segment, which we feel will take some time over the next couple of quarters to revive. The other segments should hold up, including lighting and luminaires. So clearly Bajaj Electrical is something that we'll prefer from the consumer discretionary space.
Decent numbers as well, I think the last one or even the quarter before that, but the last one for sure for Bajaj Electricals. By the way, a few other intradays, so a Bata should come up. It was a recommendation at 255, I think from Sandeep, and at 1137, Bata is having a really good afternoon. It's a spike up in trade, 1134, up 9%, but a sparkling move there. Crompton Greaves has actually gone up even further. So from the levels that it was half an hour ago, it's now up about 9%. Yeah, there it was in the red, and now it's up 8% in the green. So from the lows, it's almost a 10% move for a Crompton. And I think select financial names, Indian Overseas Bank as well as M&M Financial. These are a couple of names that I think stand out there. Good going there. The other one is NMDC, which has bounced back a bit. It's probably one of the few metal names which has done well. Now, various theories about NMDC. It's a company that has got cash on its book. If you look at the erstwhile dividend that they have paid, the dividend yield seems to be okay as well. And maybe that's why it's probably one of the safest metal names to get into if you do indeed believe in contrarian investing, which may last up to 3-4 years. I personally don't think it's a great idea, but a lot of people believe that metals is a good investment bet right now. However, Motherson Sumi is the other one, 316 and counting. On cue, Ashwini Gujral, Motherson Sumi up at the high point of the day. I'll couple that up with Bata, which is also trading at the high point of the day. Two stocks that you speak about quite often. What are the charts telling here?
Third call is Motherson because it is an exporter.
Ashwini, can you hear me?
Yeah.
Yeah, I was asking you one about Motherson Sumi. The other one is India. Now, Ashwini, can you hear my voice? I'm asking you about Motherson Sumi and Bata India.
Yeah, I got your question. Okay, now Motherson went below 300, and I think that was a great price to buy it even now because the highs were around 400. So you're actually getting a 25% discount on Motherson Sumi. Plus, it's an exporter. So today is a good day to buy into Motherson Sumi. It may consolidate a bit, but chances are these prices are great. Even on Bata, probably news has been bad, etc. It's come down from 1500, but it's holding 1050, 1100 type of zone. So whenever you get good news, maybe it's a 6-month type of call. Chances are Bata will also get back towards 1500. So basically, different league of stocks are moving. Things which are too capital intensive or where infrastructure etc. is involved could take a backseat, and consumer and exporters could do well for the time being.
Right. Okay, M&M Financial, IOB, NMDC, already spoke about these. Tata Steel too is not having a bad day. So really a decent enough outing for a bunch of these mid-cap names. There is Den Networks, Hathway Cable from amongst those stocks which are actually doing well. So the cable and the distribution names haven't had a bad day, and I think the smart city names too. I saw Schneider a while back. NBCC at a point of time was up 10% because of the whole smart city news and the press conference that lasted there. So NBCC, Schneider, KEI, Sterlite Technologies, almost everything related to the smart city project, because of the number of smart cities that have been awarded, have been very, very active in today's session as well. You actually spoke to an upcoming company, but Pennar Industries, the new one as well, new kid on the block, have some smart city business, and I think they were very bullish on this whole business too.
Yeah, I mean, from whatever he said, Aditya Rao from Pennar Engineers, he talked about how they are essentially focused in South India and West India, and that's going to really help them scale up. He's already had some conversation with municipal bodies. I think he spoke about how he's had some feelers given to the Telangana Municipal Corporation. So, given that that's pretty much going to be the focus area, and municipal bonds are going to part finance these projects too. I think all the companies which are in this business or which can value add to the implementation of these projects, they would be in the sweet spot. In fact, on that note, Mayuresh, Pennar Engineers, the market is pretty excited about this issue. The stock also reacted post the smart city announcement. As the issue closes today, what's your own sense for retail investors watching us right now? How do you evaluate the business?
Unfortunately, Tanveer, I think we're not covering this stock, so I'll not be able to comment.
From among some of the businesses that would service the implementation of smart city projects, do you have any thoughts and ideas on where the opportunity might be for some of these specialized players? We've already seen how Schneider Electric would be a key beneficiary, if they were to perhaps scale up, drawing more business from the possible orders that may come by. Pennar also confirmed that. So any specific names and opportunities you size up there?
So, Praveen, I think there are a host lot of opportunities when smart cities come up. There are digital opportunities, so there are cable laying opportunities. All these cable companies, specifically the fiber optic cable companies, can actually benefit a huge amount if the tendering actually starts coming through for a lot of these players. The EPC guys can actually start contributing meaningfully. Because I think when you're looking at infrastructure being built, I think you're looking at whole lost of activities coming through. Cement players. So I think all players will basically get involved in all this, but it really depends on the focus and the intent of the government to award and tender projects related to these smart cities. So clearly it's been a mix of businesses that can benefit, but no specific company that in our coverage, in our opinion again, that can benefit immensely from all this. I think a whole host of companies in an opinion can benefit across cement, cabling, IT, and you can name the whole lot probably.
Yeah, perhaps I was just trying to draw out a name which would be a specialized player in terms of specialized services offered, rather than broad spectrum of service providers. But we'll talk about that in a bit. Mayuresh, just help me get in ideas. Drawing towards a close, 10 minutes left for that. Ashwini, come in with your closing strategies.
On a closing basis, I think possibly HDFC, according to me, has bottomed today. So anybody who wants to buy it long term, this is the right day to buy HDFC, because it's taken out 3 down days with 1 bar. And often this is not the type of stock that moves 8%. So definitely there's been some institutional buying. So with a stop, say around 1150, I think in the next few days you could easily see levels of 1300.
Hemant Thukral, I want to come to you on this as well. You've given us a short, a 2-3 day idea. You've given us a couple of ideas for the series as a whole. If somebody is wanting to do a BTST or an STBT, would you have a thought there?
See, if somebody wants to do a BTST, then I would prefer a stock called as Bank of Baroda.
Okay.
2 reasons behind that, because first, I have seen that now the stock has started seeing some fresh long positions being rolled, and it's been an outperformer among all the PSU banks. So though Union Bank has seen more volume on the short covering front, but I would definitely prefer Bank of Baroda for BTST. But here I will give only a target till 190. I think the stock was already quoting around 185, 186. So 190 to 192, one should come out of the stock. And if it goes below 183, please come out. So it's just a BTST call, but I feel Bank of Baroda will be a good mover tomorrow morning itself.
Okay, so Bank of Baroda is Hemant Thukral's top recommendation as well. Hemant, I'll have one final thought with you as well, but I think our research team members are waiting by to give us a sense of what dealing rooms are recommending in the session today as well. And let's get in Darshan and Yatin to speak about precisely that. It's been an active day of trade. The mood must be cheerful. Darshan, let me start off with you first. What is it that you are hearing from your dealing room sources?
clearly at this point of time, the buy recommendations are clearly coming in. People are actually talking about it because over the last few days, so many people just refused to talk. They said there was nothing in the market to even speak about. But that's changed. Stock specific Man Industries is something that dealers are talking about. It's up almost 14% in today's trade. Dealers are indicating that some HNIs are actively accumulating the counter. The second counter that they're speaking about is Hexaware, which is also up in today's trade. Dealers indicate a big domestic mutual funds has been the actual buyer in today's trade. So Hexaware is the second one. And finally, Cipla is something that dealers are talking about. Now over Cipla, over the past few weeks, there have been issues as far as some top management leaving the company. But the buzz on the street is that, a top executive from one of the rival Hyderabad-based companies is set to join the company as the chief financial officer. So that is the buzz that is going rounds on Cipla.
Sure. Darshan, thanks very much for that. Yatin, come to you. What is it that you're picking from your sources?
Well, Tanveer, you guys were discussing about HDFC and the kind of move that the stock has given in trade today. But clearly at this point in time, dealers believe the kind of sell-off we saw yesterday and the kind of bounce back we are looking at possibly indicates some kind of a short covering. So possibly from here on, there could be some profit taking that could happen in trade tomorrow. Of course, today is expiry, so the stock is holding up. But clearly dealers are advising a caution on HDFC. But do watch out for Tata Motors. A lot of brokerages turning positive on the stock, including Barclays, which is overweight rating in the target price of 560. And clearly, dealers believe that at this point in time, buying on declines is something that one should look at for Tata Motors. Also, they're recommending a BTST here. And the cash segment, Polaris and Rico India, both of these companies are from the IT sector. So mid-cap IT is something that dealers are talking about, that HNIs have been aggressive buyer after the recent correction. And this price at which both of these stocks are trading provide a good buying opportunity for short-term traders.
Thanks, Yatin, for that. I think Symphony is a stock that we've highlighted. We've been talking about it, and Neeraj spoke about it about 15-20 minutes back. Let's bring that up. And Ashni, you have a call on this into the last 2 minutes left of trade?
See, I think 13th of August the results came in and it made a 20% type of bar. Now, whatever happened, that low was not taken out of that day. And chances are Symphony has bottomed out. And from here, it should head back towards those 2,900, 3,000 type of zones. So, Symphony is a buy even from a medium-term type of perspective.
Fundamentally looks strong, and right now technically too looks okay. Hemant, before we thank you, I was looking at the top Nifty 50 gainers. Aside of HDFC, the other 6 names are all commodity names: NMDC, Cairn, Vedanta, Ambuja, Tata Steel. Any ideas in this space? Because they've been beaten down so much that there could well be a natural bounce back too. Would you go out and do a contra trade on any of the commodity names?
I would actually like to highlight here that it's more of a short covering rally that you are seeing right now. And can it continue for another 2-3 days? See, I am of this belief that they have been beaten down too much. So Tata Steel, you may see going back to 235, because that was a very strong support that it gave away. Actually tested lower levels of around 205, 210 and it's rebounding back. So at least it will try to test its last very strong support. So I think 230 to 235 Tata Steel can test. That's a safe bet to buy among the commodities. But very clearly this is more of a pullback rally. So anybody who's trying to play that has to be a trader with very nimble footed. So be sure that you get out of the stock at 230, 235. Nothing on the rollovers front that I could see which could tell me that metals can see or metals can move up positionally from here. So pull back, yes, because they have been beaten down completely, and another 4-5% Tata Steel can move up. So I will prefer Tata Steel from here.
Gentlemen, stay on with us. We'll get your closing thoughts as well. An important day to actually get a sense of how things may fare in tomorrow's trading session. It'll be the last session for the week, in a week that has been fairly dramatic, actually historic, more to say, given that we started off with the big crash on Monday. But what a comeback, really. And the sanity in the market has returned. Whether it's sustainable or not remains to be seen, but we are pretty much closing out this series on a fairly decent note. So, given the volatility that we witnessed over the last 3 days, the market has settled up 2% for the Nifty. 79.50, as Hemant pointed out, the upside could take the market, the Nifty that is, all the way to 8100. For the broader markets, also fairly encouraging, and I think that's something to take heart from, the fact that it's broad-based, and you're looking at the mid caps as well as the large caps, see some buying interest. Part of it could be short covering led, but be mindful of the fact that there has been an opportunity to see some genuine buying come back into the market. So the small cap index is up 3%, the mid cap index is higher by about 2.5%. The stock story of the session, to my mind, is HDFC. This financing major, after yesterday's sell-off, one had thought that, and it's lost about, remember, 13% over the last 7 sessions. One would have thought that there could have been more downward pressure, but in the pullback rally, this one has provided leadership. So good performance, closing in, that's nearly $100 gain for the stock in a single session, and closing on the heels of 1200 in today's trade. Following that is, of course, NMDC, which is up 7%. There's Cairn, which has done really well. You have some of the high beta names, some of the commodity names, where also there's been a bout of short covering. So Tata Steel, Vedanta, those are names which have held out. And of course, the Bank Nifty, that one takes the headline too. There's been participation there from across the board. So PSU banks, private banks have moved. The screen is awash in the green, and perhaps one would say thank God that tomorrow's Friday, because if we were to take cues from the US markets, then perhaps we are in for a fairly decent, promising, positive finish to today's trade, to tomorrow's trade possibly, and to the week as well, recouping some of the losses and the damage done on Monday.
Okay, let's quickly go across and hear out Ravi Visharodi, ED of Tata Motors, as he spoke to us.
So I think in the small commercial vehicle category, which was really a category which got defined when ACE was launched, with new products have come in. They've created some initial flurry, but they've all sort of settled at a certain level. So in the ACE segment, we still have over 80% market share. But this is the 2 to 3.5 ton segment, which is the pickup segment. So in a sense, the distance between mini truck and pickup is getting blurred. So that's a segment where we have a lot of headroom in terms of market share. When we launched Super Ace about 3 years ago, it had a huge run of success, but then we found that people who did not have an equivalent product, competitors, they dropped the price of their standard pickup to almost the same price or even below that of a Super Ace. Since then, we've improved the Super Ace. We have a Super Ace Mint now with a 1.4 litre car type CRDI engine, which is very powerful. But that's at a 5 lakh rupee price point, close to 5 lakh rupees. So it is squarely in the pickup segment. We are finding that an ACE buyer is also looking to have a vehicle which has more power. And by definition, it will fall into the pickup segment. But that's not really our intent. ACE is a brand with huge equity. But the fact that it has only an 11 HP engine with a peak speed of 60-65, the gradient is what it is a huge success. In 10 years, we've sold about 1.5 million. But there is a market which is evolving now, and it's rather that we plug that market. So the upward movement is something which we want to arrest. And if it is there, it will come into this product. So I think it's going to be an extremely strategic product, because all the other products which are catering in the pickup segment are closer to 4.75 to 5.25 price point. At 4.3 to the most attractive.
Okay, speaking on exports and what could well happen to that side of the picture for Tata Motors as well. Okay, just want to mark a few stocks before we get in final closing comments from our experts. Look at Bata. It's had a 11% up move, 1157. It was trading at 1,000 a few days back, and again it goes to show it's really not about trying to find those hidden gems. The gems are just there, but on a bad day when the market, or on a few bad days when the markets have fallen quite a bit, if there are companies that you can safely say will not get impacted because of what's happening to China, then those are things that you could actually bet on for the long term. It's probably a fail-proof strategy, so to say. Easy to say right now, of course, when the market is going down, you don't probably have the strength to go out and buy. I think that could be a great idea to buy. Bata is probably one such name. From 1,000 to 1145 this week has been a very interesting move for Bata India. 10% of course up in today's session, so the large portion of the move has happened today. But let's get in final thoughts from all our experts. And Hemant, before we thank you, you've given us broadly almost all the index and the stock specific names as well. One pocket that we haven't touched, Tanveer was referring to it, and that is the exporters and IT in particular. How do you approach them in the next series?
See, if I am talking about next 3-4 days or 2-3 days and I am looking for a pullback, very frankly, IT may not be an outperformer, because IT people will be looking out if there is further depreciation in rupee, or there is basically uncertainty again starts to come in. Then I think IT will be preferred. But overall, as I am expecting a pullback, I would be watching for high beta stocks or auto and banking or some names like that, which can really move up sharply. But within the IT space, I will just mention two stocks. I think one is Hexaware, which has seen a lot of short covering today. So, and there is more, the momentum may be maintained, and I see it going up to 256. And among the heavyweights, I think Infosys will continue to outperform the way the rollovers have happened. I think Infosys you will see again trying to go back to 1120. So within the IT space, I would prefer these two stocks. But for next 2 to 3 days, the best way to trade this market is buy a Nifty call and watch how much the pullback can show more strength.
Thanks, Hemant. Thanks very much for giving us your ideas, your insights, and also your advice on how to approach the new series. Appreciate your views. Mayuresh, closing thoughts from you as well. Maybe perhaps you could help our viewers with some of your high conviction ideas. I know you spelled out some of them during the show too, but if you were to drill it down to 3 specific names, high recall, what would those be?
Clearly, I think from a long-term perspective, we are liking the banking and NBFC space. Absolutely, I think no relation in what China will do to the private banking space, at least in our opinion. So something like an Axis, yes, LIC Housing we continue to prefer. IT again is something that we'll continue to prefer over a longer time frame. So Infosys, TCS, HCL Tech is something that we are continuing to like. And from the power space, I think Power Grid is something we'll continue to like, along with Tata Motors, which in our opinion, from the auto ancillary space, he's expected to post decent set of numbers from FY17, and the kind of valuations it is deriving right now are simply too attractive. So clearly I think these are the picks that we've got from a 12 to 15 month perspective.
Okay, thanks Mayuresh for that. Thanks for joining us as well on the show and giving us your sense of the market. It's a good comeback rally and let's see whether it plays out for the final session of this week as well. That's tomorrow. The cues are giving us a positive indication. But come to you, Ashwini, how would you advise viewers to approach tomorrow's session, the first day of a new series?